Hello, everybody. It is great to be here again today. My name is Gary Fowler, and I am the CEO, president, and co founder of GSD Venture Studios, a premier AI and quantum venture studio located in Silicon Valley. I've done 17 companies and been involved in two unicorn and a successful NASDAQ IPO. Company that I was on the original management team of Click Software was sold to Salesforce for 1.35 billion a little less than 4 years ago, and I'm also the co-founder of Viva.ai. A couple of years ago, I founded a company called GSD Venture Studios, which is a premier AI and quantum venture studio located in Silicon Valley. We believe that intellectual capacity is evenly spread, but opportunities aren't. Anyhow, it was with great pleasure today that I introduce a friend of mine, Peter Plaut. Peter is an accomplished expert in the real estate industry, an investor, family office guru, a top-ranked Wall Street veteran, recognized for his ability to manage through crises, went through the 2008 crisis and had received some honors, and creates a positive investment opportunity for all those involved with him. He is the connector of connectors. He knows everybody, and he's opened his network to be able to help people that are in need. So with that, I'd like to introduce my friend, Peter Plaut. Hi, Peter.
Gary, it's always a pleasure. Sorry, I'm coming out a little purple here today. I'm actually.
I thought this was like one of those cartoons, like a Barney or something back in the old days.
I'm coming to you from New York City. I just landed actually from London, so I don't know why I got the Willy Wonka color going on. I didn't have any grapes this morning, but
hey,
it is what it is.
It is what it is. You know what I mean? I was going to say you look a little peaked, but now you look great, Peter. So it's great to have you here today. So tell me a little bit about it. You've been back and forth between London and New York and Washington. What drives you to go back and forth so much? Because I mean, it's amazing. You start off your career, you're from New York originally. You went to Rensselaer, I believe, got your degree, and then you started this journey back and forth. What makes you the ping pong effect? Why do you do it? Do you love London or do you love New York or what's going on?
I've been chased out of all these places. I don't know what I could tell you. Too many wives. No, seriously. So I went to engineering school at Rensselaer Polytechnic Institute in upstate New York. Great, one of the oldest engineering schools in the country. However, back then it wasn't that well known for having fun. Let's say the fun was going to the large stacks and in the library and reading. Back then, we only had large mainframe computers, so it was going to see the mainframe computer. So if you want to have any fun, you need to go to another university. Luckily, my younger sister went to the University of Maryland. I have a lot of friends that went to American University in GW in Georgetown in DC. So that got me going to DC every couple of weekends. After I graduated university, I decided to go on start my career on Wall Street. I probably should have gone like you to Silicon Valley, since those were the companies that were wooing us back then. But I got sucked into the Wall Street thing, and thus now, many, many years later, 3 decades later, with 6 kids that I know about, clearly I'm going to be working for the rest of my life. So that's what brought me to DC, Gary. London, I was moved to London by Salomon Brothers back in the mid-90s. I kind of go wherever there's a crisis to try to fix that. So I'm a fix-it man, particularly on distressed opportunities. So that took me to London. It also took me to Korea, it took me to Latin America, etc. So always on a plane. The pandemic has obviously limited that travel. But luckily, I was at home, got to meet great people like yourself. We developed a great bond, and we got to meet each other. The digital became the reality in Naples, Florida, several months ago. So it wasn't
it's fantastic. It was great seeing you and your wonderful family. You there, Peter? Well, you went off for a second. You're back. You're on mute, Peter.
There you go.
Yeah, that one went off for a second. But anyhow, no, it was great to see you and your lovely daughters. So you have 6 kids. I didn't realize you had 6. I thought you had 5.
No, I have 3 boys, one set of twins there. They're 24. They're working in D.C. now, following their father's footprint. I have a younger son who's
Wait a
18,
minute.
lives on the Upper
All
West
the
Side.
how many of them are in the financial industry today? They're
Zero.
there you go. And how about a management information
And
system?
two of
Because
them,
I
two
know
of them
that.
are focused on tech, just so you know. My
Yeah,
one
but
son went
that's
to
your
Indiana
degree from
University.
Rensselaer, right? You studied technology, management information systems, and economics at Rensselaer and comp sci, right?
Yeah, so I learned how to program in assembly language and then COBOL before we started learning C, and we were programming for mainframe computers and then for desktop computers for the trading floors back at J.P. Morgan in the late '80s, early '90s before technology was really that used. The reason I got a job on Wall Street, not because I came from Wharton or anything like that, was simply because I knew how to program computers, and we were moving to an area in Wall Street where we had to have fast computing to detail with all the algorithms that were needed for fast-paced trading. So they needed quant geeks like myself at the time to be on the trading floor. So that's how I moved onto Wall Street. It was because of that technology background.
Okay, so tell me, how do you go from Rensselaer to J.P. Morgan Securities and into the training program? And then, I mean, so you made the complete flip. Is that when the flip took place when you went to J.P. Morgan?
So let me tell you something. I've been trying to teach this, Gary, to my kids time and time again, and I hope one day it'll get through to them. Hard work, hard work, hard work. Okay, working 12 hours a day. That's great, and you need to do that. Hard work and determination to be successful is a key ingredient. Okay, luck has nothing to do with it. You make your own luck by working hard. Okay, however, you need to leverage relationships. So this little computer geek with acne, taking the train every day into the city, okay, was sitting next to a lot of guys in suits. Back then, everybody was wearing suits and ties, three-piece
I
suits.
remember
We're talking
that
about the
with
late
the
80s, right?
monogram sleeves and everything.
That's right, right. I got one on right now. Anyway, old school. So I'm sitting next to the train with a guy with slick back hair and braces, looked like a Wall Street guy like Gordon Gekko. So I started talking to him. And we started talking more and more. And turns out that he was a managing director at Drexel Burnham Lambert. It just happened to go bankrupt, but that was the junk bond business, if you remember, under Michael Milken. And
Yeah,
he moved
sure.
over to JP Morgan Securities. And he said, I needed somebody with the quant experience to help me program trading opportunities on the trading floor because the guys I have from Wharton and Stanford and Harvard, that was beneath them. So he asked me to come work for him. So I made the transition from being a
Wow.
computer geek at the time to moving on to the trading floor. And if it wasn't for that relationship I developed, and I wholly believe in relationships, you need to have a rabbi wherever you go to learn from. That propelled me to start my Wall Street career.
No, that's great. That interesting story. So one train ride and you met this person and all of a sudden it changed your life.
That's right.
Yeah,
And we're
you
still
never
very close to this day.
Yeah, you never know when you're going to meet. So you went down through, and how did you come? So you've gone down through all these different companies. I mean, you've got a 7-page. I've never seen it actually this big of this much experience on LinkedIn. But Bank of America, Solomon Brothers. I mean, you went BTIG, Hoved. I mean, you went right through them. And how did you move into the family office? So what made you say? Did you wake up one day and say, "Oh, I want to be in the family office now"? How did that happen?
Actually, I tell my youngest boys that in terms of that relationship and stuff, it'd be great to meet somebody that has a family office because the family offices are created for those people that have extreme wealth, ultra mega wealth. And that could be created on Wall Street money or just from serial entrepreneurs like yourself, Gary. So I figured if they marry into somebody that owns a family office, they could take care of their old man. Otherwise, I'm going to just have to keep grinding it
There
out
you
every
go.
day.
There you
Um,
go.
but no, and the family office space is something that was an enigma for me. I didn't know too much about it. Most people don't. So let's just clear it up right now. When you have started a company or several companies, you're a serial entrepreneur, or you make it on hitting it big really as a hedge fund manager. Okay. The amount of wealth that's created is so significant that you can't possibly manage that yourself. Nor can you manage that by simply giving it to a private banker at one of the large investment banks. You need to have it professionally managed. So basically, you create a family office as a separate company to manage that wealth protect that wealth for multi-generations, because you have so much wealth it'll be taken care of for generations to come. To protect that wealth, you need professional money management. And so they set up a family office. In some cases, these family offices are so large they could rival some of the largest asset managers that are out there. And I would argue, if you look at the exponential growth that's happening among the ultra rich around the world, and more people are being able to be propelled as the world gets smaller. We have a global community. That global village becomes smaller. There'll be more and more wealth that's generated. There'll be more family offices, and this wealth is quite significant. So,
what are we talking about, Peter? I mean, let's talk about the wealth. What's a typical person in a family office, in a single family office and multi? How much money do they have? What does it look like? Are they billionaires? Or they have $100 million? Or what's the deal?
Well, a single family. What is a single family office? That's the family office created to manage the wealth for one individual or one family. A multi-family office is when several individual families collectively come together to combine their wealth to make it much more powerful. And that's when you're talking about multi-family wealth. In terms of multi-family offices, you're talking about probably in the several billions of dollars, if not tens of billions of dollars. But how much does it take to create a family office? You can create your own family office with a relatively small amount of money. But you really, to be impactful, when I say impactful in terms of efficiency, in terms of investing, to attract the top institutional type of asset managers to manage that you probably need to have somewhere north of 50 million. I would say an average family office is probably 50 to several $100 million, and the largest family offices are well into the multi-billion-dollar range. So at that point, you're looking at ones that can compete with some of the largest money managers out there in the globe.
Yeah, so it's interesting. We deal with family offices too. And how do they make decisions on their investments? If you look at a VC versus a family office, how are the decisions made by those managers? Are they the same? Do they do it the same way, as the same due diligence, or do the families take active roles and say, "Listen, this is what I'm interested in: real estate or impact investing, or whatever, AI"? How does it work?
Well, let's separate. You mentioned something about VC versus family office. Okay, forget about that. Okay, family office simply is a pool of capital, either as a single family office or multi-family office, Gary. Okay, so within that family office, there will be a CIO, or chief investment officer. Okay, the chief investment officer, in contrast to an asset management company like the BlackRocks, the Blackstones, the PIMCOs, etc., that'll have teams and teams of people, and you're talking about thousands of people usually working in them. Family offices tend to be very flat organizational structures. You could have either one individual or several individuals, but it's not going to be 100 individuals likely. So you're probably talking anywhere from 1 to maybe 50 people or so in total in the family office, and that's starting to get quite large. So you'll have a CIO who'll make all the investment decisions at the end. He might have
You
one.
froze for a second, Peter.
I'm back in. So you'll have the CIO.
Okay.
You will then have some portfolio managers for the opportunities and the work. At the end of the day, it's likely to be a very flat organizational structure. So there'll probably be a collective decision among the small group of people where to invest. But like anywhere else, it's asset allocation. So most family offices, their primary asset class will be real estate, because real estate tends to go up over time. It is a great store of wealth. Okay, beyond gold and obviously treasury securities and ETFs, etc. But just very basic. Most family offices will have a large allocation to real estate around the globe, and that real estate will probably have an individual that's responsible for overlooking those real estate investments. Then you'll have probably another individual that's responsible for equities across different equities. And if the family office is large enough, you might have several people that have knowledge of individual asset classes within equities, whether that's TMT, technology, media and technology, industrials, oil and gas, energy, et cetera, et cetera. Then you probably have another individual that would be looking at fixed income or credit investments as well. And that's probably the max. Okay. The equity person going into the portfolio manager will probably make an allocation to VC in terms of much more risky investments that have a much higher alpha generation, but extremely much more risk. You'll have another pocket that'll be in fixed income, where you're basically just clicking a coupon and hoping to get your principal back plus that coupon at the end of the day. So your upside is capped, to par plus a small coupon. And then obviously, typically growth equities, dividends, etc. And then some might have, as ours, I'm a multi-billion-dollar multifamily office. We will not only do those individual type of investments across asset classes, but we'll do our own direct investing. And what does that mean? That's basically private transactions where we will invest 100 million, 150 million, a billion into one real estate project or one oil and gas project or several, a portfolio of those, but we'll do it directly in terms of equity and debt financing because we feel that we're sophisticated enough to do direct investing just like that. Now, it's unlikely that we would just go out and do that as a VC ourselves and call us a VC unless we had that technology capability. So in many cases, we would probably look to an asset manager that has the experience to invest in AI, crypto, cybersecurity, and others that has that experience that we could leverage. You never want to invest in something that you don't have enough experience in. So at the end of the day, we're not taking a punt here. We're managing multi-generational capital. At the end of the day, we want to protect that multi-generational capital, but get enough upside for the risk that we're taking.
And then a couple of the family offices that we deal with, their family members are actually intimately involved in the decision-making process. So one of or two of them are assigned on the team. Do you have that? Do they get involved in general, or is this an anomaly? I've seen it a couple of times where family.
Absolutely not. If you're going to be a large enough family office, whether it's a single family or multi-family office, the reason you create that is because you don't have the knowledge enough to make investment decisions, right? So you give that to the professionals to do, because in many cases, these entrepreneurs, these families made a name, made the extraordinary wealth that they have through doing what they're good at. And that's operating a company, managing a company or a portfolio of companies, but not necessarily making investment decisions. If you combine their experience and that of a professional money manager together, there'll probably be a lot of conflict. So are they involved? Absolutely. Okay. But there is somewhat of call it a Chinese wall, so we can get on with what we're good at and what we're paid to do.
What kind of returns can family offices, what are they shooting for? How does it work?
Well, listen, that's a very difficult question and it's loaded. I would tell you from our family office perspective, depends if, we have several different strategies. We have a wealth protection strategy where we're investing in equities, some credit, a CTA manager. That's getting a bit complicated now, but a CTA is basically a type of transaction or a project where we're investing to make sure that we protect our upside and we limit our downside as well. By investing in managed futures and other types of things. So we'll have an allocation to protect capital. So it's a wealth protection strategy, not looking for huge upside returns, but managing the risk of downside. So that's one strategy. We'll have another strategy that might be much more risky in its nature. And then, like I said, in terms of the private direct investments, which I overlook, particularly on the real estate side, we're looking for 20% plus equity leveraged IRR equity return. So we're basically looking for an IRR 20% plus on the equity that we invest. Now, if we're just simply doing a debt financing for a real estate project, depending on the risk, we're talking about a mid to high single digit type of coupon. We're not looking to make huge outside returns on fixed income investments or loans. We're looking to make that on the equity risk we're taking, because equity obviously has is the most risky part of any investment decision.
Huh, interesting. What are some of the trends? How have you seen a change over the last 3 to 5 years?
The biggest trend, I think, to hit the family office space is the investments surrounding digital currencies, cybersecurity, AI, nanotechnology, etc. It is something, family office for the most part are very conservative, as I mentioned, but they need to generate returns. And when we're looking in a world that's so flushed with liquidity right now, you're not getting those returns, particularly not on the fixed income markets. In terms of some government bonds, probably have negative real yields. And
Mhm.
equities are, I wouldn't say priced to perfection. There's value in different parts of the equity space, but clearly we've had a big run up over the last year. So we'll need to look to diversify away from the traditional asset classes of real estate, art, traditional equities, traditional money managers, traditional hedge fund and private equity investing. So what is there? It's moving forward, looking at AI, digital currencies, etc.
What
So
about
there has been
NFTs,
over the
Peter?
last 2 years a huge inflow of information and conferences focused on family offices into this particular space.
What about like NFTs and things like that? Are the family offices interested in those or not?
I think again, it depends on the family office. Probably more a focus for single family office, and within the single family office, probably one of the family members because it's new, but it's definitely here to stay. It's definitely something that's intriguing, and I think it should be allocated as a portion like anything else. You need to have a majority in real estate and traditional money managers, private equity, credit funds, and then you have a smaller pocket. I couldn't tell you whether that's an allocation of 5 or 10%, etc. It's more discretionary, let's say, towards that particular space. And in
And
that space, I'm not talking about just NFTs. I'm talking about cryptocurrency, etc.
no, blockchain. I mean, there's a lot of trends taking place. If people don't keep up, they're going to be left behind because it's moving too fast. How is
I don't think
it?
it's not about being left behind. Not to interrupt you, Gary. I
Mhm.
think when you're talking about the amount of wealth that is managed by the collective family offices around the globe, okay? Protecting that wealth, protecting the companies that generated that wealth for those families, okay, require knowledge. You need to have a chief information officer, not just a chief investment officer. You need to have somebody that's protecting the data, not just of your portfolio companies, but also of your investments. Because you just saw over the last year and a half what's gone on in terms of hacks and stuff. So, crypto security is going to be much, much more important going forward.
Mhm.
There's still a lot of talk about family offices and as well as retail investors going more and more into cryptocurrencies without having the adequate knowledge base, and therefore you definitely need to have that much more experience and you need to have that much more protection involved, and therefore there needs to be a wholehearted education of the system. And I think many of the larger family offices are becoming much more sophisticated in the space.
That's interesting. I mean, how do you like? Is it all about network and contacts when you're dealing with the family offices? How do you find new family offices from the one you have, or how does it work? How do you develop contacts like that? I mean, you've been around a
Um,
long time, right? And so I know when I talk to people in New York, they say, "Oh, I know Peter. Tell him I say hello." I've had that happen more than one time. So
um,
how does it work? How do you get those contacts? Because you got to, on one side, you got to market yourself a bit, right? And position yourself, I would say. But how do the family offices say, "Hey, listen, Peter and Wimmer Family Office is a place I want to go. I'm really interested."
well, first of all, remember we're not taking outside capital necessarily in terms of if you're looking at a single family office, it's just managing the money of that family.
Yeah,
If you're
sure.
looking at a multi-family office, it's several families that have come together. Now, if the manager of that multi-family office has the ability to add other families to that, and the other families are okay with that, then that's up to them to go out and find those other families. But for the most part, family offices have very interesting names, kind of like many hedge funds that are out there that you probably never heard of, never will. It's private pools of capital, want to remain under the radar screen. Whilst
Got
the
it.
families might be very, very prolific, might be out on social media and everybody knows who they are, their family offices, for the most part, will have a name that's very different than their underlying names of those families. And and probably keep very, very private in the nature in terms of the family office and their investments as well. They are not, they're not regulated entities for the most part, so they fly under the radar screen. So when you ask me about how do you get to meet different families and stuff, I'm not going to say it's an elite network by any means. I think it's just a private pools of capital that like to stay under the radar screen.
So I'm just trying to figure out. So if you're building a family office, you want to build a multi-family office. How do you find the next person? Is it just through your contact network, or do people come to you?
So I think it's a combination thereof. It's the existing
Mhm.
network and the people coming to you.
That's great. Well, you've done a great job. Listen, we're coming to the top of the hour. So closing thoughts and how do people get a hold of you? So out there, Peter's a guy. If you're going in a Wimmer family office, give him a call. He's an incredible guy. He's the Nostradamus of knowing what's happening in the family office environment. He's been around a long time, has a lot of contacts. I've heard nothing but positive about him from all the people that I've talked to, you referred me to. So reach out to him. So Peter, closing thoughts and how do people get a hold of you?
Listen, I think the most important thing, Gary, is the fact that we're in this age now, although the world is opening up, where we could do these chats on social media. I truly believe in helping people to better understand what we do and being a mentor to them. So I encourage you to reach out, talk about family office, talk about investments, talk about private equity, credit funds. I think that when it comes to AI and crypto security and others, the most important thing is to leverage those people in your network that have that experience, like yourself and your partner Derek, and others. So I wouldn't tend to be an expert in that space at all. I look for experts for the investments from our family offices. We discuss for those. Look, I could be reached at peterplaut.com. I'm on Instagram. You can find me on my mobile. My email's there. So please feel free to reach out. Happy to have any type of long discussions on individual asset classes, trials and tribulations in my career over the last 30 years. Just reach out.
Yeah, no, you're amazing, Peter. You're well versed. People like you a lot, and you've done an incredible thing. So I want to thank you for taking time out of your busy schedule to be on my show.
And hopefully I won't be purple when you call me. I have no idea what went on here. I'm just sitting at
It's kind of funny.
in a
Behind you with
hotel
the
room,
light,
so.
it's normal, but here it's purple. But hey, that's showbiz. Anyhow, the show goes on. To my audience, thank you very much. My name is Gary Fowler. We will be back with another exciting edition on Thursday featuring one of the board members of the NAACP, Lamel McMorris. So stay tuned for that. I'd like to thank my entire team for making GST Presents possible. Nick, Derek, Zhenya, and the rest of the team, because without them, this wouldn't be possible. Thank you very much. Stay tuned, stay happy, stay safe. My name is Gary Fowler, and I will see you again shortly. Thank you.